For the Twitch stream, Short SPX had asked what are the advantages and disadvantages of using VIX to hedge with, and my response was that I don't really use VIX to hedge, but I use things like UVXY and TIVX and SVXY and these inverse and forward-facing volatility ETFs in order to trade against the market. So if I think the market's going to drop, then you can long something like UVXY, and if you think it's going to go up, then you can either short UVXY or you can find an inverse volatility ETF, which will go the opposite direction. Second question was, what are some good strategies to make profit with small cash? So Liam had asked this question right here. He was wondering, what are some good strategies to make profit when you have a small account? One way is by using options, because you can trade a lot more stock. But the downside to that is that you end up with stuff that you can lose the entire amount. So you really have to understand things like theta and how decay will affect your options prices and how implied volatility affects the option prices. Because you really can make a lot of money with options, but it's very risky because when things go against you, and even sometimes when they just go sideways, your options will decay over time. So you can actually end up losing money even if the stock goes in the correct direction and if it goes sideways. So trading options is in my opinion, is a good way to make money using a small account. Another way to make money using a small account is by doing some basic swing trading. And it depends on how small of an account you're talking about. But just remember that when you're looking at a stock, if you've got a $1,000 account or a $2,000 account or a $5,000 account, it doesn't matter if you're buying, let's say 10 shares of Beyond Meat at $100 a share, or buying, what's a stock that's around $1,000 a share, like AutoZone? Yeah. Or buying one share of AutoZone. If the thing moves 5 or 6%, you're going to make the same amount of money either way. So the investment is the same in terms of the actual investment. So just remember, when you are making trades, you don't necessarily have to have a lot of shares, and you don't have to be restricted to only trading cheap stocks when you're trading a small account. If you get one of these things like, Beyond, you've got $1,000 and you buy 10 shares of it, or you short 10 shares of it, say at $130, and the thing drops $20 a share, it might not be a very big gain, but making a $200 or $300 gain on a small account is humongous, right? That's a 20% return on your account. So if you can build up those small gains over time, they add up. What else we got? Short SPX, yeah. So I do use Tastyworks to trade. I actually use Tastyworks and Thinkorswim as well as Robinhood to trade. Tastyworks, I like it for trading because at the time anyway, it was a little bit cheaper than Thinkorswim, and it's not as Thinkorswim is trying to do everything, right? It's got futures and options and regular stock and Forex. So Thinkorswim is a huge application, and in my experience, it was kind of a memory hog, and it's really buggy. So Tastyworks is a little bit lighter weight, which I like because it's a little bit faster. But Thinkorswim definitely has more features for sure. For beginners of the stock market looking for long-term growth, how can we tell where good entry and exit points are? That is actually something, Ninja, that I'm going to talk about at the end of this. So hold that thought. Any broker that trades options in the EU. Interactive brokers, perhaps? And Bud was saying DeGiro. Yeah, I'm guessing that Interactive Brokers does. I know a bunch of traders in the EU that use Interactive Brokers, but I don't actually know if they're trading options. So I'm not sure on that. All right. How influential to stock prices are bearish sentiment, and could widespread bearish sentiment, even if there's a lack of any evidence as to upcoming drops, bring significant declines? Yes, absolutely. So sentiment is everything in the stock market. There really is no rule that says that there has to be, at least in my experience, there's no rule that says there has to be a legitimate reason why something goes up or down. If you look at something like Beyond Meat, yeah, the stock was beaten down for 3 or 4 months and it dropped from $140 to $70. So it lost 50% of its value. Sure. but it was already overvalued, you know, when it was way up here at $240 a share. And but there was no real reason that this thing had to go from 75 back to 135, right? There's no reason for it to double. There were a couple of news pieces on this. Impossible Foods canned their, what's the word that I'm looking for? Basically, they were trying to set up an agreement with McDonald's, and they gave up on the pursuit of that. So, you know, that kicked off Beyond Meat a little bit. And then Beyond Meat got some other news that was positive. So, and on top of that, you have a lot of people that were short selling it, and they were most likely waiting for it to crack this 70 level. And when it popped up out of nowhere, it probably surprised a lot of those people and trapped them. And so those short sellers are now losing money. And that's what ends up happening, right? People start getting more and more panicked as the stock goes higher and higher and higher, and it starts to short squeeze. But there really is no, like, you know, there's no real reason why this happens. It's just sentiment. And the same thing is true for any stock, whether it's up or down. All right. Question about diversification. Munger and Buffett are against it. Same with Mark Cuban, but the gurus love it. Only reason why I bought bonds, shit has been bleeding me dry. What do you think on SCHZ? Miss Bra, I'm not sure I understand your question. Is SCHZ so SCHZ, is that the ticker? Oh, so this is a bond ETF. Okay. Question about diversification. What's your question about diversification? All right, what are some good stocks to buy tomorrow morning? Labels, come into the stock market today chat. It's right here. Stock market today. Come into this chat tomorrow. There's like 50 people in there giving trading ideas. Yeah, so Miss Brush, tell me what your question is about diversification. In general, I think that diversification in all of life is good. You don't want all your eggs in one basket. So, you know, buy bonds, have a 401k, an IRA, have some day trading accounts, swing trading accounts. I mean, it's always good to diversify. Even people that are super wealthy, right? You diversify out into businesses and real estate and stuff like that. So diversification is good, at least in my opinion. Let's see. What are your outlooks for the next week, month in terms of short and long-term stocks? Well, I think that the market right now is pretty extended. I don't think I would really be surprised to see us pull back to at least like 325, maybe even 320 on the S&P 500. The NASDAQ and the S&P were both showing a little bit of weakness today. The NASDAQ is really extended. See how far it's gotten away from its 200-day moving average, like way up here? It's really, really far away from its average price. And you can see what happens when it tends to get real far away from that moving average. It's like a magnet. It pulls it back. And it's been pretty far away from that 200-day moving average for a long time now. So I think, short term at least, we're probably due for a little bit of a pullback, but long term, who knows, right? As long as we keep pumping good news out and the economy keeps going up, right? And jobs numbers keep getting better, things are going to keep going up. There has to be a reason, I think, for things to go down, whether it's sentiment or whether there's a real fundamental catalyst. The market is not just going to randomly tank overnight. Jock says, I got lucky buying Tesla as my first shares, but I want to hold this very long term. What would be a good cheap stock to profit from, or should I go for penny stocks? Well, why does it have to be a cheap stock? It doesn't. That's the answer. It doesn't have to be cheap. So take whatever money you've got and put it into a good company, whether it's cheap or expensive. And if you are looking for cheap stocks, don't just focus on the fact that it's cheap. what I would suggest is find yourself a company where you can actually understand the business and understand how they make money, and find something that you actually believe has some value. A lot of the stock market, a lot of trading is just emotional anyway. So having something that you actually believe in and that you actually feel has some value will really help when things start to go against you. So just keep that in mind, I guess. Yeah, Miss Bra, the response about diversification, I had said that I feel that diversification just in general is good in all of life. Any brokers that are good for trading stocks in Canada? Not that boy. I think that Thinkorswim, TD Ameritrade, I think has a Canadian branch. And also Interactive Brokers is very popular. TradeStation also, I believe, can do Canadian traders. I'm not entirely sure. It's been a while since I traded with them. What do you think of Tradingview and to pay for it? Jason, Tradingview is really cool. Personally, I use Tastyworks, and I also have a TD Ameritrade account, so I have Thinkorswim. So I don't really have a need for using Tradingview because this software does everything that Tradingview does. But if you don't have, a brokerage account with software like this, like E-Trade Pro or one of those, then Tradingview is a really good option. I think Tradingview is probably one of the coolest websites that I've seen. It's really, really an elegant website. Everything works really well. And I think that the services they offer are extremely valuable. When do I know to buy a call or do a put credit spread? Like, how can you predict that the stock will go up in a few days? Yeah, so Liam, Loogie here, he showed me, he actually called Tupperware out. I had literally never even traded Tupperware in my life. I did not even know that Tupperware was a publicly traded company until Loogie pointed it out today. So I guess you'll have to ask him where he found it. It was just a good trading setup. I looked at the chart as soon as he mentioned it, and it's one of the same types of patterns that we saw on Beyond, right? This stock was beaten down and down and down and down and down, and then it kind of just flattened out and it consolidated into this really tight range. So it's not necessarily that we knew it was going to go up. It's more that if it didn't go up, the risk is really, really low, because if you buy the thing at 8.15 and it doesn't work, you're going to lose maybe 20, 30 cents a share at most. But if it does work, it has upside, to $13 before it really runs into any resistance. So if you can risk 20 or 30 or 50 cents and potentially make $3 or $4 a share, I mean, that's a really, really good reward to risk ratio. So just statistically speaking, it makes sense to take that kind of trade. Loogie, you are looking at my broker setup. This is what I use. So I've got my watch list over here on the left, and then there's just a small chart on the right-hand side, which has like any working orders or any filled orders. And then there's some different tabs here for building watch lists on the other side, and there's an alerts thing. So I've set up some alerts here for there's a couple of alerts for Roku, one for CGC today. So yeah. And so one of the things that I look at in like the screenshots that I'm putting in the chat room, if I see like Tupperware, right? So the first thing I do is I look at the chart, and then I go to the trade tab, and this is the options chain. So you have your calls on this side and your puts on the other side, and the volume and all the different strike prices. And so if you were gonna actually buy it, then this will tell you, what you're buying, and then you just hit review and send, or make changes if you need to. So this is this is what Tastyworks looks like. All right, so I'm gonna pause this because there were people that asked questions on the Reddit thread. So we'll draw a line here and come back to these questions. And if I don't get back to these before we run out of time tonight, then post them on the, Questrade. I forgot about Questrade. Then post them on the Reddit thread later and I'll get back to them. Just because I want to get to these questions also. This person had asked about GSX versus TAL and TKWY, which I was not able to find. That might be like an OTC stock or something, or possibly it's a typo, but I didn't have any data on it. So I don't know if it's foreign or if it's just a typo or what. But GSX versus TAL, I did look a little bit at these. I don't know really anything about either company, but it looks like they're both Chinese education companies. The one thing that I did pick out is that TAL seems to be much more established. So TAL was established in 2003. So this company has been around for quite a long time. And they've got a $20 billion market cap. They've got about $1.25 billion worth of cash as of 2019, as of December 2019, and $215 million in debt. The other one is really, really new. So it's tough to say, without really looking at what their first earnings release is going to be like, or what their next earnings release is going to be like. They had big revenue growth from 2017 to 2018. But, it's just tough to say because there isn't a whole lot of data on this company yet. So if you were going to go with, just something that you expect to be a stable investment, I would say TAL is probably, just comparing the two of them, I would say that TAL is probably going to be more stable just because it's more well established. It's an older company. It's got, I didn't catch how many employees it had, but it's definitely more established. This GSX, it's got about 1,000 employees. I must not have had data on the other one. So GSX versus TAL, I think really the only thing that is clear to me is that TAL is much more established. So consider that. And the other thing that I noticed was on the cash flow statement. So GSX has just recently posted their first positive cash flow. Granted, it's their first earnings, but cash flow from operations is a key driver of share price because it tells you whether the company is profitable on a cash basis. So the fact that they've just posted their first cash flow is nice, but TAL has been cash flow positive since at least 2008, potentially earlier, depending on how far their data goes back. It looks like I've only got data back to 2008 on them. But they've been cash flow positive for quite a long time. The one thing that I'm interested in on TAL is why their operating cash flow has dropped so much as of 2019 versus 2018. So I would look into the filings and try to see if you can figure out why that is. But, cash flow is always something that I look at. Also, they have a ton of cash and very little debt. Their total debt is right around 215 million, but they've got quite a lot of cash. Where is cash? Balance sheet, cash and cash equivalents. So 1.26 billion. By the way, just one thing I want to check quickly. Okay, so foreign currency to US dollar exchange rate. I wanted to make sure that this was actually accurate because there are certain companies where the exchange rate isn't converted and they report in Chinese currency or they report in their native currency, and my site here doesn't actually convert it properly. That's a bug that I'm working on at the moment, but I wanted to make sure that that wasn't the case, and it does not appear that it is. TKWY is a food delivery giant. in Europe. Interesting. So I wonder why I don't have data on it. Is it publicly traded? Is it traded on US markets, bud? And thoughts on the food delivery sector in general? I think that the food delivery sector, I mean, damn, if I could get my food delivered and never have to actually leave my house, that's awesome for me. So, personally, I love the food delivery thing. Sign up for a $300 a month service and they basically just bring you your groceries every month. That's great. Rinsable was asking, what companies are perceived to benefit greatly from the trade deal between the US and China, and do you agree mostly? Trade deal with China. One of the things that I think will definitely benefit from the trade deal with China is basically anybody that has high revenue exposure in China. So chip makers, Qualcomm, NVIDIA, Micron, any kind of chip makers or semiconductor manufacturers that generate a lot of revenue in China will almost certainly benefit from the trade deal there. Potentially even things like Walmart and some retailers like Kohl's, if they do a lot of business in China, that would be a possibility. The other ones would be companies in the US that import a lot of stuff from China, right? Because they're sensitive to those tariffs. So if the tariffs go away, then the costs of importing everything goes way down. So things like auto parts retailers, Bed Bath & Beyond, Dick's Sporting Goods, or anybody that imports stuff from China and then retails it in the United States is going to be sensitive to tariffs. So I would watch companies like that as well. There's probably more, but those are just a couple that come to me, kind of off the top of my head. What else? No, Liam, you did not miss the super secret announcement. What are your favorite indicators to use? Good question. So I use very few indicators. I keep my charts relatively clean. The two that are on here are the volume weighted average price, so VWAP, which is the blue line, and the 200-day moving average, which is one that I use as a guide for the long-term trend. So the 200-day moving average gives you the average price over the last 200 days, and typically that's going to be strong support and strong resistance. So if the stock or the market is above it, as like the S&P 500 is right now, then it's going to tend to stay above the 200-day moving average. But when you see it break underneath the 200-day moving average, and then it comes back and it tests it from underneath, it will act as resistance. So you can use it as a guide for sort of whether the long-term trend of the market is up or down. Other ways that you can use this, you can watch it for potentially rolling over as it started to do here back in the end of 2018. Notice how the 200-day moving average was actually starting to turn down. And if you put on some of these other moving averages like the 50-day moving average and the 20-day moving average, they would be even more downturning because they're more recent. They're based on more recent prices. So when you start to see these moving averages roll over, that tells you that on average, the market is losing value day after day. So that's what I use those indicators for. And then intraday, I don't really use the VWAP on daily charts, but things like, let's look at like Shake Shack, because this was in a nice trend for the last couple of days. And actually maybe even Beyond would be a better one because Beyond Meat was trending for several days. So if we look at, say, like a 5-minute chart and we go to just today, see how the volume weighted average price, which is basically kind of like a moving average, but it also considers the volume that was traded at each individual price, which gives it a little bit of weight. So it's kind of like a weighted average as opposed to just using only the prices. It also considers the amount of volume that traded at those prices. So you can see that it kind of acted as a wall that Beyond Meat was unable to get through. Tesla was pretty similar today, if I remember correctly. Yeah, so Tesla was kind of battling this VWAP for quite a long time. And you can see once it cracked underneath it and and was unable to reclaim it, it really started to fade off a lot. So similar to the 200-day moving average and the other moving averages, I use VWAP as an intraday sort of moving average to find support and resistance. Blue, yeah, actually, so I do use EMAs occasionally. I used to only use the 50 EMA for day trading, but I don't day trade that much anymore. I'm more of a swing trader and an options trader at this point. So I didn't really have a need for the shorter moving averages. But yes, intraday, definitely the 50 EMA has been really useful for me over the years. So I would not shy away from using that at all. It's just at this point, I don't really want a lot of clutter on my charts, and I don't use it that much anyway. The other thing is, after you've traded for a while, you start to just be able to kind of see where the moving averages are based on the price. And you've seen these stocks like Tesla fight VWAP so many times over and over and over again that, you can identify like 535 or 530 or whatever is going to be around where VWAP is. So you start to identify just areas of price on the chart as opposed to needing the moving averages. So I take a lot of them off over time. I used to use a lot more indicators than I do now. Okay. Short SPX reposted my question from a while ago. I'm curious what you think on buying Wayfair 60 days out, Boeing 20 days out, Dollar Tree 40 days out. Trading based mainly off technicals. These are trades I'm interested in, trades you're in and confident in. Okay, so I need strike prices, short SPX. So on W, what strike prices? And same thing on Boeing and Dollar Tree. So there's BA, DLTR, and what was the other one? Wayfair. All right. So I always start my analysis on the daily charts. And actually, sometimes Tastyworks is not the greatest because you can't zoom out all that far. So let me actually open this in Tradingview since we were talking about that earlier. So let's open up Wayfair in Tradingview. See what this thing looks like. All right, so that's a monthly chart. I must have been looking at the S&P 500 or something. 1 day. See, this is one of the things that I like about some of these other trading platforms. Like Thinkorswim is better about this than Tastyworks is. Like you can zoom out more. And same thing with DAS Trader and Sterling, and even Tradingview is actually better at it than Tastyworks is. But you get a better idea of what the trend is like, right? This is clearly in an uptrend, but when you look at it in Tastyworks, it kind of just seems like it's all over the place. So 60 days out, what strike price are we talking about here? Moderately out of the money for each one? Well, yeah, I mean, looking at the long-term trend on Wayfair at least, it did just come off the bottom here at 80. It's got to come over the top of this resistance at right about where it is right now. So if it can hold over $100 a share and start to push up above like 110 and kind of break this downward trend line here. So it'd be easier to see this if we drew a line in Tastyworks. Like this, right? So it's starting to break that trend, but it needs to confirm, right? It could easily just make the trend like this instead, right? And just roll over and die. But if it does continue up, if it comes back and say retests 100 and then starts to drift up towards 120, 130, then yeah, it actually looks pretty good. Sure, Jinja, I'm still answering Reddit questions. What question do you have? Moderately out of the money on each one. Oh, and so the other two were Boeing. So Boeing is tricky, right? Because first of all, it has a strong technical support level here at 320, which if it breaks underneath that, it could drop pretty significantly because there's not a lot of support except for maybe around like 300 from back in December of 2018. There's not a lot of support on Boeing underneath 320, at least from a technical perspective. So that one is a little bit more risky in my opinion. The other thing that's risky about Boeing is that they have all these issues with the 737 MAX crashing and people canceling their orders and stuff. So if that starts to come through that it's affecting their earnings more than people expected it to, this is going to suffer in my opinion. So 60 days, not sure. I guess it depends on if you're holding through earnings, which I'm guessing we're in the middle of January here. You're probably going to end up holding through earnings, which could be risky on Boeing. And the other one was what? Dollar Tree. Yeah, so Dollar Tree is another one, like massive uptrend on this thing right now. And it's actually a pretty healthy uptrend too, right? Because it's not just straight up. I mean, if you look at something like Virgin Galactic, right? This is not healthy. It's a mess, right? It's shoots off to $12.50 and then it tanks to $7 and then it's right back up and now it's at 15. You know, this is not a healthy trend. This is emotion and craziness. On the other hand, something like Dollar Tree, when you look at the long-term picture of it, it's a nice smooth uptrend. So it's kind of at the bottom of this channel. It looks like it has to hold, at least short-term, it's got to hold above 90-ish. If it holds above 90, and especially if it can get back above 95, it'll probably start to test 100 and possibly start to fill in this gap. And that could definitely happen within 60 days. Let me look at the Reddit questions again real quick. So Frozen Darkness here on Reddit was asking about Virgin Galactic and then Beyond and NKTR. So I did pull up NKTR. I am really not good at analyzing biotechs personally, at least from a fundamental perspective, but this thing went on a crazy run back in 2018 from 25 to over 100, and it has faded all of that back. So it kind of seems like NKTR just, you know, on a strictly technical basis has just kind of come back to where it was. And it's kind of resuming its uptrend a little bit. You know, if you just chopped out this whole section of the chart and moved this piece over here, it would just kind of look like it's, you know, still doing what it's supposed to do. Where is the... There we go. That's what I was looking for. Right. So if you just chop this whole section out, it kind of just looks like it's trending up. And, you know, the current action is right within that trend. But biotechs can change on a dime, right? Because they come out with positive clinical trial results, or one of their drugs works really well, or one of their drugs fails. It could go from $20 to $0. It could go from 20 to 100. So biotechs are tricky. But I do like them because they are volatile. So pay attention to the news on this. And if you're looking at it as an investment, make sure that you understand the science behind their drug. Make sure that you understand what their competition is like, how big the market is in terms of the disease that they're curing or trying to cure. And also possibly talk to Slightly Communist in here because he's much better at analyzing biotechs than me. What has been your most successful underlying for trading options and least successful underlying? So it's kind of a mix for me, RJ. To be honest with you, I trade a lot of different underlyings. I'm not really stuck to one particular underlying. For a long time, actually, I was just trading SPX. And that was reasonably successful, just selling premium on it because we've been in a bull market. So, you know, it's really easy to just keep selling spreads week after week after week, and it would just keep going and keep going. You just collect the premium. But when things start to get real volatile and when the market gets real extended, it becomes a little bit too risky to do stuff like that because it only takes one tweet or one piece of bad news from the Middle East or one piece of bad news from the Fed, and the whole market comes crashing down and kills your trades really quickly. So over the last few months, I've actually been trading debit spreads, and I've moved into trading individual stocks. So there's been sort of a theme of these stocks like Shake Shack, right? They go on a big run, and then they get beat down for months and months and months, and they kind of flatten out. And then they get one little piece of news, and boom, it shoots off from $60 to $75 or $60 to $72.50 in 2 days. Beyond Meat, same thing. Big spike off the IPO, all the way up to $240 something a share, and then it fades off for months and months and months. It starts to flatten out around the original IPO price. One piece of good news, and magically we go from 75 to 135 in what, 1, 2, 3, 4, 5, 6 days. So this is why I've been trading debit spreads lately. It's working really well. So hopefully that answers that question. Boeing is in mad debt. Let's find out, actually. Boeing. Balance sheet. As of total debt is $24.65 billion as of September 30th, 2019. So that's must be their last quarter. So I'm guessing, or their most recent quarter anyway. So we'll probably get an updated number there soon. So $24.65 billion in total debt. They've got $136 billion in total liabilities. So they've got a bunch of other liabilities outside of just their regular old debt. And what's their cash situation look like? So $10 billion in cash, $25 billion in debt, $117 billion in total assets, $132 billion as of the most recent quarter. So, yeah, I mean, they do have a lot of debt, but Boeing is a humongous company. Thoughts on JMAI long term? Let's take a look at JMIA. Well, long term, it looks like a big old turd, to be honest with you. What is Jumia? I don't know what Jumia is, so it's tough for me to make a decision on this long term. However, what I can say is that it looks very similar to these things that have been running lately. If it comes over this $6.75, probably over $7, maybe $6.50 to get an early entry on it, this could easily go on a run to 10 or 12. Depending on what the float and the short interest looks like. Let's just take a quick look at that. So, JMIA. So yeah, one of the things we're going to be talking about, this is not correct. There's no way this thing is 82% short. But I'm going to guess if FinViz is saying that it's 82% short, it's probably just a bad float value. You could probably check NASDAQ as well. But if FinViz is saying that it's 82%, it's high float, high short interest, which means there's a lot of short sellers probably buried in this thing. So if it's low float, meaning there's very low supply, and it's high short interest, it's not going to take much to kick it off and turn those short sellers into losers, which causes them to buy and push the price higher and higher and higher. So this one might be one to keep an eye on, at least in the short term. All right. So Blue wanted to know, can you briefly explain the concept of a gap fill? The concept of a gap fill is basically that when the market gaps, as it did on Beyond here,
Well, actually, this is a better point over here. By the way, these lines that are on my chart are just stuff that I drew on here because I was identifying support and resistance levels. So let's get rid of those just to clean it up. So the concept of a gap fill, right, is that over here on October 28th, the stock closed at 105.41. You can see that in the little box up at the top. And then October 29th, something bad happened overnight. I believe this might have been earnings. I think this was earnings that they had. Yeah, October, so it would have been earnings most likely. It opened at 82.96. So it closed at 105 and opened at 82, which basically means that there is no way that anyone could have gotten out of it unless they were trading in pre-market. So there's this gap where there were no buyers or sellers. And typically when a stock gets into a gap like this, it tends to fill it in because there's no resistance anywhere, right? There's nobody that bought in this area and there's nobody that sold in this area. Everybody just kind of got wiped out overnight. Or in this case, the shorts got wiped out because there was this big gap over here. But the general idea is that when a stock gaps, it will eventually tend to fill in the gap. And that's what happened here. So you can see it kind of stalled. It stalled right at the gap as it was coming over, you know, as it was coming out of this bottoming pattern. So it popped up, it kind of hit the gap one time and then faded off. And then the second try, it stopped right at the top of the gap. And then you can see it opened and filled it up to 98 or so. And then once it was filled in, then the short squeeze started and it shot off. Okay, so guys, if you have questions that I have not answered, either tag me, you know, send me a private message or just tag me in the chat sometime or post them here on the Reddit thread and I will try to get to them later. But I want to try to keep this under an hour if we can. So if you don't know me, I've been involved in the market since about 2003. I've been trading heavily since 2011. And what I used to do was on the side, I would teach people how to trade stocks. And this whole Reddit Discord chat has been really, really good in just coming up with trading ideas and sort of building a trading community. And I've found that there's not really a lot of good free content that's like really comprehensive that can take you from not even really knowing what a stock is to being able to actually go and trade for a living if you wanted to. So that's what my goal is with this. So what I've done is I've taken all of that material that I have, like years worth of material of screen sharing and videos and trading data on thousands and thousands of trades. And I've consolidated it all into this framework that I'm calling Market Essentials. And I'm going to, over the next several months, be sharing this with everybody via these live chats. And I'm going to record it all. It's going to go on YouTube. It's going to be available for everybody in the market for free. So that's what we're going to be doing in these live chats for the next several months. So if you are interested in learning how the stock market works, you want to get better at trading, or you're already a good trader and you want to come in here and learn some extra strategies or learn what somebody else's strategy is like, then come on in and check it out. So I've just put together sort of the outlines of these things so far, but I'm going to be doing this one next week. And the way that it's going to work is it's broken into what I have so far as 9 modules. So we'll cover some fundamentals of the market, things like what a stock is, how the stock market works, how to choose a broker, what the different buying and selling methodologies are, how to read candlestick charts, right? So like just high level overview stuff. And then we'll look into identifying trading opportunities. So I have all of these, like, look at these screens. If I go to the screener, I have all of these presets that I've built over the years to find low float consumer goods companies, uranium stocks, Chinese stocks, low float stocks, biotechs, 360 low floaters with volume from 500,000 to 10 million.
Actually, this is probably float from 500K to 10 million. To be honest, I've not even looked at these things in a really long time, except for the weekly options ones that I'm using more often now. But like, I have all of this stuff, so I wanna share that with people, since it kind of feels like it's going to waste. So we'll look at identifying trading opportunities, how to generate ideas with FinViz, the things that I look for when I'm looking for explosive trades. We'll talk about which stocks tend to move together, right? So like solar companies, weed stocks, low float stocks, meatless meat companies and their friends. We'll talk about support and resistance, how to build an edge, how to build a trading plan. And this is all going to be live so that you can ask questions as we go through it, just like we're doing right now. So that is the news that I wanted to share with everybody. So if you have suggestions about things that we should cover in this, definitely send me a message. Let's leave this as a living document, because right now I've got 9 modules. Analyzing the market as a whole is number 3. And then there's a module on risk management, technical and fundamental analysis. Level 2 in time and sales, which is really, really useful. If you've never used level 2 or read the tape before, is really, really handy. And then tracking trading performance and options. This is probably going to split into multiple. This will probably split into multiple modules, just because options is a huge topic. But I'll at least share what I know about it and what's been successful and what's been unsuccessful for me so far. And then the rest are up to whatever still remains after we've dumped all this information out into YouTube and the internet. Yeah, Blue, date for the first session is next Wednesday. So yeah, guys, come to these chats. It's going to be really, really good. I used to charge $2,500 per person, and it would take like months to go through this. We would trade live and we would analyze trades together. It's really, really good, and I'm excited about it. And I want to share this stuff with people, because I don't really share it with anybody anymore. And it's just sitting here. Like, I have all these videos and old charts with like markups on them and examples of different patterns in technical analysis and stocks that have gone crazy and things that have worked and things that haven't. I have all this data just sitting here, and I'm not sharing it with anybody. So I'm going to kind of brain dump, and hopefully it'll become one of the better courses out there that you can get for free. Where do you sign up? You don't need to sign up. All you got to do is come to these chats. We're going to do them every Wednesday. All right. Let's cut this off, guys. I don't want to make the YouTube video too long, but I hope that everybody enjoyed this. If I did not get to your questions, please message me, send me a message on Reddit, on Discord, just at me or whatever you got to do. Also, come into the Stock Market Today channel. We're in here like all day talking about what we're buying and identifying stocks. I'm not in there all the time, but lately I've been spending pretty much the whole day in there. So come on in and let's trade some stocks, make some money. On that note, I am going to somehow figure out how the hell to cut this off. Where'd the live chat channel go? There it is. All right, guys. So yeah, next week we will do the first chunk of this Market Essentials framework. So we'll go through the market fundamentals. This is going to be review for a lot of you guys, but I still recommend that you come and check it out. And if you can't make it, don't worry about it. It will be on YouTube. It'll be on the Twitch stream and all of that. But definitely come check this out if you can. Even if it's review, we'll talk about how to pick the best broker, and you guys can ask questions. We'll talk about analyzing the market and the 3 different methods of analyzing stocks and how to read basic candlestick charts if you don't know how to do that. Like if you're using Robinhood or something like that, and you've only got line charts and you're not really sure what all of this gobbledygook on these more advanced charts is, come into this chat, because we're going to go over all of it. So come back, and I hope everybody enjoyed this, and we'll see you then.